Hey there, everyone. Welcome to the special edition of The Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com, joined by special guest Grayson Roze here at StockCharts. Good to see you, Grayson. Happy New Year.
Good to see you. Yeah, I think we're still able to say Happy New Year, right?
I think so.
We're pushing it a little bit.
We're in early mid-January.
Yeah, okay. I like that.
I don't know how happy it's been, though, so far, though, because we went from a roaring November, December into a little more of a breather here.
We did. I got to say, though, I mean, I'm pretty bullish on the market generally, and I'm kind of happy because what we saw at the end of the year last year was not normal. You don't want to see that. Even if you're bullish, no matter how bullish you are, you don't want to see the market go up every single week.
It was aggressive.
9 weeks in a row, we needed to pull back.
We needed a break. So I feel like if you're kind of long-term bullish, this probably feels really compelling here because now things coming down to a little more reasonable level.
Right.
As we're recording this here, we're starting to see the market pop a little bit higher here, led by some of the growth stocks. We'll see what kind of names we're both suggesting here or indicating. We're talking today about our top 10 charts to watch for January 2024. Let's get to the charts, shall we?
I think we should. Are you taking it away first?
I'm going to kick it off here. So when I think about the markets at the end of last year, it was super growthy, right? We had a lot of technology, communication services dominating, particularly the mega caps.
Yep.
We're going to get to that later in my 5 picks, but my first couple are going to be outside of the growth areas, and they're going to be in healthcare.
Okay.
When I'm scanning for sectors that are actually showing signs of improvement, I'm finding two sectors that have come up. Financials, and a lot of those have played out, right, with names like JP Morgan and others really pushing higher at the end of last year. But I'm looking at something like Boston Scientific. This is less of a thesis on healthcare, which I'm not necessarily married to. But the thesis here is it's a chart that is broken out of a base. And you and I have both highlighted many names where you have a big run, you have that consolidation period, and then you break to new highs. And that's what I like about the chart of BSX. When you look from like mid-22 really to mid-23, it's kind of this nice consistent uptrend. We're sort of above two upward sloping moving averages. The momentum is pretty decent, and overall conditions seem good. And then here we stalled out in May. And so May, June, August, September, really into November, we keep testing this same range around $54, $55 a share. And then something changed here. We gapped higher in mid-November. That was when the CPI number came out, and everything kind of gapped higher. The S&P and the NASDAQ still have those gaps. And then we kind of pushed higher from there. And so I see this as a rally into a consolidation pattern, 6-month, 8-month period where it's going sideways, and then something changes. And I like when something breaks out of the base, pulls back to that breakout level like we did here in early December, and then results to the upside. So the concern with a chart like this, when we're talking about timing for it, is the fact that we're overbought, right? And overbought means up a lot. That means it's had a pretty good run. So I think you want to be more tactical about it, looking for opportunities on a pullback. And I think some of the names we're probably talking about today have that kind of pullback set up now.
Yeah.
But I like sort of the medium-term trend. I like the fact that we've broken out of a base and pushed to the upside. The relative strength really hasn't improved a whole lot. And, again, a lot of things were strong at the end of last year. So it's sort of continued higher as other things did. But in the new year, it's actually held up quite well. So this is one of those groups of names, medical equipment, and there are others in that group as well, holding up while everything else is kind of taking a breather in early 2024.
Yeah, I do like to see that relative strength. I mean, getting kind of back up to new highs. So that's nice to see. I mean, it's been relatively sideways for a while, but now pushing back up to new highs as this thing makes its way up.
Yeah,
with the group strength too out of healthcare. It's a good pick.
And it's a sector that I think a lot of people are kind of underweight on, or certainly there's less attention than there has been in quite some time, right?
It's not been a great sector. Largest sector in the S&P 500, isn't it?
Is that true?
I think it is.
I'm going to believe you. That's crazy.
I think it is. Yeah, it's kind of one of those ones that people like to forget about. And it's got such a mix of offense and defense in it. It's a funky sector.
Yeah, people, when you think healthcare, people, a lot of things like pharmaceuticals or healthcare providers, but there are supplies, there's equipment, the biotech.
It's got the biotech side.
There's a bunch of those, a bunch of different groups in there.
Yeah, space that's been finding some strength right now.
There we go.
Good pick.
Your first pick. Where are we going?
So my first pick is going to be interesting. I do like this thing on its own. I like it technically.
Okay.
I also think it says something about the market that we might be in. I said that I am pretty bullish, but this one actually is kind of the opposite. So I got a couple things to say about my first pick here. This is going to be Edison International. This is EIX as the ticker symbol.
Utility.
A utility name,
Okay.
conventional electricity.
Okay.
So on its own, technically, I love the breakout on this thing. If anyone has been following this show, they know that I like to draw horizontal lines across my charts and find stocks that are breaking out to new highs while outperforming the market. This thing doesn't have quite as much outperformance as I would like to see, although the relative strength line is starting to tick higher. So I do like to see that. But technically on its own, there's our horizontal line. This thing is breaking out really nicely from a nice sideways consolidation here. Sitting above key moving averages, we've got the 20 absolutely flying higher. That's that dotted blue line. So I like to see that. I like the move and the way this has been heading up. What's interesting, though, is that I am almost disappointed that I'm picking this because it is a utilities name. And if you're bullish on the market and you want to see offense lead, you want to see growth lead, this is not what you want to see working. So I do think it's an interesting setup. If we do kind of follow that seasonal pattern and we have a little bit more of a weak Q1, I think this could be a great play.
Yeah.
But it does say something to me about the market. If we see stocks like this, if we see utilities start to lead us higher, consumer staples start to lead us higher, that's not what we want. So interesting little kind of sector analysis built into this pick.
You mentioned the seasonality, which we hadn't talked about yet. I mean, the first quarter in an election year tends to be pretty weak, right? I mean,
not the
January,
strongest.
February, and certainly March is when you tend to have a pretty
Right.
good low. How much of that factors into your thinking when you're looking at charts now?
Yeah, I always like to say that it's kind of the backdrop to my thinking. So
Yeah.
it's a factor in there. I'm not making any decisions because of the seasonality. It's price first, it's charts first. I'm following what's actually happening in the markets. But as things are playing out, according to those seasonal patterns or against those seasonal patterns, that's an interesting kind of additional piece of thinking. So if we see the markets do something that they typically do, I'm going to be less worried about that, even if it's scary. We talked about this last year, at the end of last year, kind of in the late fall, markets being weak in September, October. Sure, they were weak, but it's not that scary when it follows that seasonal pattern and we kind of know to expect it. If markets are weak at a time when they're normally strong, that says a lot more. So again, I like to describe it as kind of a backdrop.
And certainly the end of last year followed the seasonal pattern, almost perfectly, right? You had the low in October, strong November and December, and that, the last 18 months have been pretty close to the seasonal playbook, which again makes me feel a little less excited about the markets here, just given the fact that
that's fair.
We're in a weaker point. But it's funny, and utilities actually have at times done fine in good markets, right? It's not an all or nothing kind of thing.
Right.
So I'll accept your first pick. EIX is an interesting one, and a decent yield, by the way, which
good yield,
which is a fair point.
A little bit.
All right, my second pick, and I promise I will get out of the healthcare sector after this one, but I'll then go to biotech, and we mentioned some of the groups in there. You and I both, I think there's a top-down component to my process, which is just thinking about asset allocation, thinking about stocks versus bonds, and just the general trend in the markets. But then there's also the bottom-up practice, right? We both have scans and alerts that we're running pretty regularly just to see what the conditions are and where the opportunities might be. And for me, I'm seeing a lot more healthcare names pop up in the last 6 weeks, right? Certainly at the end of last year. And Amgen was kind of a surprising one. I sort of saw that pop up and I was like, okay, interesting. And when something pops up on the new high list, it's not an automatic buy in my mind. It's sort of let's look at the chart now and really think about the structure of it. And what I like about Amgen, it's sort of a classic cup and handle pattern. It's not perfect, but it's pretty good, which is you had this run in 2022. We hit this significant peak in November of 22. Then you have this big rounded bottoming pattern, right? And so we sort of retested that same high here in October of last year. Then we have this shallower pullback, and there's the cup, and then the shallower handle. When you break above that sort of rim of the neck or rim of the cup, the neckline around 285, that's a pretty classic buy signal. And what's interesting is having looked at these kind of charts a long time, I will tell you when the cup and handle fires and when you break out, part of you feels like this is way extended, like, oh my gosh, I'm buying new highs. That feels uncomfortable. But if you look back at market history, a lot of really amazing gains have come after breaking out of this kind of pattern.
Exactly.
So the fact that a biotech like Amgen, obviously pretty big name in the space, is breaking to new highs, I think is important. What I like about this chart, a couple things. We're now obviously in a clear uptrend. We're above 2 upward sloping moving averages. The relative strength obviously starting to improve. Other things are pulling back here. This is a group, of course, that's not. So I like the stability there. And I also think when you have a breakout like this, there's kind of a natural stop that I tend to have in the back of my head. My general approach to a chart like this is you're, kind of buying the breakout and you're using that breakout level as an initial stop. So at the beginning, as long as we hold that 285 level on a pullback, it's kind of normal behavior after the break. At this point, we've continued to follow through. So hopefully you can, push a stop higher and use a trailing stop and kind of lock in additional gains. But overall, this is again a sector that I think we're kind of underweight in terms of our attention, and I'm seeing constructive patterns. So whether or not I'm bullish or bearish, and again, the seasonal weakness in Q1 makes me cautious, but I always think it's a good time to own good charts, and something like this breaking out seems like a good opportunity.
Yeah.
The last thing I would say is it's overbought, but it's extremely overbought. The RSI is above 80, and that a lot of times that happens when you've really pushed higher, and there's often a lot more to come after that.
Right.
Really heated RSI. I think that's kind of where we're at here.
Right. I love that you're pointing out the breakout, and it might feel like this thing has run a lot, but a lot of times the big gains are just getting started when you break out.
Yeah.
There are two ways to look at this. If you turn on the inspector and you kind of draw that horizontal line across, right?
Yep.
There's two ways to look at this. It's either up a lot, or it's gone absolutely nowhere in a year and a half.
Yeah, that's right.
It's up not at all.
Yeah.
So I think it's important to keep that in mind with breakouts. I hear that a lot from people when I say, I love to trade breakouts. They're like, wow, aren't you just buying stuff that's really extended up near new highs? Yeah. No. I'm buying stuff that hasn't gone anywhere and is just now starting to move in some sense.
Hey, and if you look back at some of the weekly charts, that you've done a good job of highlighting those in previous versions of this show. You've seen that those breakouts are part of a much larger structure, and all of a sudden that's the beginning of maybe further upside.
That's where you can catch them.
Yeah.
Great chart.
There we go.
Chart. Great space, too.
Your chart number 2.
So my chart number 2 here is going to be Goldman Sachs, and we're speaking about sector strength, finding sectors that have a lot of strength in them right now, a lot of names breaking out to new highs and things like that. Financials are one of those. And actually, I'm going to jump away from the charts for a second because I want to show how strong this is. Here's a chart list from my account. I just pulled this up as we were talking. This is taking all of the sectors of the market in two flavors. This is the equal weight sector and the cap weight sector put into one chart list. In addition to that, we have the equal weight S&P 500 and the cap weight S&P 500. What we can do is sort this by scooters, okay? Because all of these in the ETF category have a scooter ranking.
Yep.
And so we can look at the cap weight and the equal weight. What is the scooter score on that, and where is it relative to the S&P 500 itself? This is an exercise I do on Sundays. It's a great little kind of fun way to think about the sectors. And what's key for me right now is that the financials ETFs, both equal weight and cap weight, are the strongest scooter score ETFs out of the whole group of equal weight and cap weight and the S&P 500, sitting up there in the 90s. That is a ton of strength coming out of financials, and it's not just coming out of the cap weight version. It's coming out of both of them. It means that you've got distributed strength throughout the entire sector. That is very different, to point something out. That's very different from what we're seeing with services, communication services, which on a cap weight basis, really, really strong, but on an equal weight basis, actually one of the weaker sectors out there. That means the strength in that is not distributed. So I love to see this from financials right now. I mean, you're actually seeing this from tech too, and you're starting to see it a little bit from healthcare. We do have healthcare moving up there on a cap weight basis and on an equal weight basis, starting to climb those ranks. So financials, though, a great area to focus on right now. A lot of names in that space coming out of beautiful bases, making their way to new highs. One of those is Goldman Sachs. This thing, to me, is a thing of beauty. You've got relative strength turning around, really clear relative strength coming out of this name, outperforming the total market. I love to see that. On price alone, you've got a fantastic breakout. We've actually broken out, tested it a little bit. We chopped around there for a couple of sessions, and even just a couple of sessions ago, we actually pulled back to that breakout and bounced off of it. We're just continuing to move higher in a name like Goldman Sachs, which is a thing of beauty. That's what I like to see is, not just a move up and then we lose it, but a move that actually continues to make its way up. Lots of good stuff coming out of Goldman Sachs. And again, shared with the space. There are a lot of names in the financials that are looking a lot like this, right? Goldman is one that I think from a risk-reward standpoint is set up pretty well, a little extended off the breakout, but still, showing a lot of signs of strength. There are plenty of other names, though, in this space that are also setting up really, really well. So Love what I'm seeing out of GS here, and love what I'm seeing out of financials overall.
I like it. The relative strength at the top is
Right.
just the key part of that story.
Right, and a big turnaround. I mean, you've got relative strength, underperforming the market here for a long, long time, then kind of bases on that relative strength line itself, and is now making its way up, outperforming VTI, which is my benchmark, the total index.
Yep.
Great chart.
Solid pick, and you're right, it's not the only one in that sector
is
showing
not.
signs of strength there.
Plenty of options in there.
All right, I will now rotate to a sector. You may be familiar with the technology sector. Usually when we've done this, you have a couple tech names. I think I'm going to...
That is true.
I'm going to take that over this time. Affirm Holdings is going to be my third one. And I have mixed feelings about a chart like this in a lot of ways, only because it's had such a run so far, and I totally get that. For me, this is less of a short-term play and more of a long-term play, right? And I think the concern I have about Q1 from a seasonal perspective is not a we retest the lows kind of concern. It's more of a this is probably a pullback type of environment, and usually means you have great setups as a medium-term, long-term investor. Those are great buying opportunities a lot of times. And so I'm looking at names like Affirm that have had really good runs. The daily chart on the last 2 years just shows night and day difference between 2022 and a pattern of distribution. I mean, really a bottoming pattern, a big double bottom pattern through the spring of last year, and then now into accumulation phase, right? We're just kind of making higher highs and higher lows. The weekly chart is what I think is really compelling on a chart like this. And it just shows you, from the IPO in 2021. I mean, late 21 through the end of 22 was just, distribution, and it just looked like this thing was potentially going to go to zero. We got down below $10 a share here. But now we've rotated back higher, and it really shows you just to get back up to, early days after the IPO, there's a ton of daylight above the chart now that we've sort of eclipsed those previous highs. So the concern I have is, has it had a run already? Absolutely. One thing I would be watching on a chart like this is signs of distribution, meaning higher prices and weaker momentum. And I think you're seeing a bit of that here in December. I think that's one of those things that tells you a pullback makes a ton of sense here. But we're still above an ascending 50-day moving average, which I think of as a general, place to look for support. That's about 11 points below current levels. I mean, it's a long way down because of the run that we've had. But I think of Affirm Holdings, and I think of some of the other sort of payment processor types of names. I mean, long term, there's certainly some upside to be had here. And when I'm looking at the weekly chart and the daily chart really since the IPO, it certainly feels like this is the beginning of a broader improvement in the space that I think runs for quite some time. The relative strength has been pretty good for the last 6 to 12 months. So I'd be inclined to follow a name like this until proven otherwise. And pullback phases in a period like this can be a good time to layer back in, potentially. By the way, this is the top-ranked stock in the large cap Scooter rankings as of this moment.
It is 99.9. In some sense, I feel bad for some of these companies that got a little bit hosed on the timing of their IPO. Going public, they're scrambling at the end of 2020, and then market turns around on them. But we've talked about this on the show in the past too. I see a chart like this, and it makes me think of the classic Weinstein stage analysis stuff.
Absolutely.
Anyone who looks at a chart like this and wants some really good context to kind of understand why this could be a great setup. Go review the stage analysis stuff. Read Weinstein's book. This to me is a classic kind of stage one breakout. Which could lead to a very, very profitable run higher. So there's a lot to like
for now, long and strong up and to the right.
Long and strong.
I'm inclined to follow that.
That's what you want to find.
Your third pick.
All right, you're trying to pull us forward out of healthcare and financials. I'm going to drag us right back into the medical equipment space here with Stryker, SYK. But a beautiful chart. Again, draw those horizontal lines across, and you see that there is a lot of resistance here above, kind of right around that 300 area. But we're once back again to test it, starting to make that move above it. I like to see the relative strength just starting to pick up. I will admit that is a weak part of this chart. But one thing that I like to look for on these relative strength lines that I always keep at the top of my charts, when you see a name like Stryker that had a history at one point of big outperformance of the market, that makes me think of this. Actually kind of pulls me back to one of your previous picks that kind of had that history of underperformance and then was starting to break out on the relative strength line as well. So I'm looking at Stryker, trying to make that breakout. I'm looking at that relative strength line trying to turn around, and I think we could have a really, really strong setup here for Stryker. Again, also in the context of its sector and its industry group, This is a space, obviously healthcare, medical equipment. We've already talked about the strength out of healthcare. This is, backed up by a lot of its kind of brothers and sisters in that healthcare space also doing really well. If that whole space is catching a bid and you've got a great setup like this, that makes me pretty confident in the move. So I like what I'm seeing out of SYK. I like what I'm seeing out of healthcare. Again, it's kind of one of those where you've got a ton of options in those spaces right now. Financials and healthcare are two of the sectors that are littered with breakouts, littered with beautiful charts to set up. So it's my second pick.
I like it. That reminds me a little bit of like BSX before it's broken. It's like right at the upper end of that range.
Right.
And again, if this momentum kind of continues, that's where you can see a lot of further gains potentially.
And I love these kinds of setups too, because from a risk reward kind of trade structuring standpoint, it makes it really, really easy, right? You can define your level, whether you want kind of new highs, or you want to take this breakout a little bit lower. You can define your entry. You can use your percentage moves to set your stops really clearly. You've got a well-defined range. I mean, you can kind of draw this down. Let's say you use those lows. That's a 15% range, a little bit less, 13, 14, 15% range. So you set your stops in the middle there. You got plenty of candles to work with there for setting your stops. It's easy to structure a trade around a chart like this, which I really like to see. So that's why I like those breakouts, like those horizontal lines.
We're on the same page on healthcare, I think, for sure.
Healthcare
and financials. I think those are two good areas.
Yep.
Now I will fight your momentum and take us right back to the technology sector.
All right, we're going back.
So we were talking before we got started. The last two names I have, I will call them utility plays more than anything. When I think about how to get defensive, right? When I think about market uncertainty, market instability, uncertainty about interest rates, the Fed, all of those things, recessionary pressures. It's like, where do you sort of hide out? Where do you reside while things are sort of confusing and they settle back in? Utility is certainly one place to go. I can't argue with that. Or even staples are not my favorite charts, but I get the argument of getting defensive, higher yielding instrument. REITs may be doing pretty well.
Right.
But I would argue that some parts of the technology space are more utilities, right? They're kind of modern utilities, right? If you think about, there are things that you're going to continue to use and spend money on regardless of what happens around. That's really the essence of a sort of a staple product that you would have. NVIDIA, to be honest with you, sort of represents the backbone of the modern internet. Pretty much most things that we use in some way are using NVIDIA's products, or certainly the technology in lots of different ways. From a technical perspective, it just keeps improving. What I like about the chart of NVIDIA here is we've been in a broad basing pattern. I mean, late 2022 and that October low, really through mid-2023, NVIDIA just ripped to the upside. One of the magnificent 7 names, I would certainly characterize it. The relative strength was just staggeringly positive, and certainly in the first half of last year, one of the better places to be out of anywhere, right? And on a heat map on our market carpet, it's this bright green box that you would, and a large one as well. What's happened in the second half of 2023, sort of that AI craze wore off. We're more retrenching a little bit, and NVIDIA really didn't break down a whole lot, which is one of the things I like about the long-term structure of the chart. We pulled back a number of times kind of in that 400 range and just continue to hold it. And now we've been testing the upper end of the range. And again, a couple of these charts that we're highlighting, your last one, Stryker, I think was a very similar chart, sort of at that upper end of the base. And I think we might hear at the beginning of in January, seeing the beginning of that breakout out of that base. And a name like NVIDIA breaking out, I think is constructive for the overall market. Names like this working are a pretty good sign. But I would also say that there could be a scenario where the broader market struggles, but a name like NVIDIA actually holds up quite well because it's more of a defensive and basically a blue chip name. This is the Walmart of 2024, kind of defensive. It's not going anywhere. We're still going to need a lot of NVIDIA products for quite some time.
Right.
And from a technical perspective, getting in as it's breaking out as opposed to after it's broken out and has gone a lot higher seems pretty good to me. What's interesting is as it's breaking out, the momentum is not excessive. It's just sort of in that positive range, and it's kind of been hovering there. The relative strength has been flat, but I think this kind of name breaking out while the market is chopping around could be a really interesting setup here. So NVIDIA, I think, a really key chart to watch just in terms of the implications for the broader equity space. But as an idea, I think it's another good setup here.
The way this thing has been beating earnings too is
impressive.
Unbelievable. These aren't just like, it beat earnings. These are it smashed earnings repeatedly. This is a company that is absolutely on fire. No, that makes a ton of sense. I think it's also important to break down a little bit the psychology of kind of what you just said.
Yeah.
Of market might drift lower, but a name like NVIDIA actually holds up pretty well. No one's getting yelled at for buying NVIDIA at this point.
Yeah, right.
It's the same thing that we've always said with Apple. No manager is getting yelled at because they put a bunch of money in Apple.
Yeah.
NVIDIA now I think is at that same point where no
Yeah.
one's getting yelled at because they bought NVIDIA, which can actually provide quite a lot of support for the name and send that thing higher.
Yep.
That's a great chart. It's a great pick.
Good long-term setup, but particularly now it feels like we may just be at the beginning of a breakout here, and semiconductors obviously a key space to watch.
Yeah, I would agree. I'm going to. I guess I would say it's kind of a similar. There's some similarities between the NVIDIA conversation, the utility stuff, and my next pick. I'm throwing Uber out there.
Interesting. Okay.
And it's a little bit different for me because on the daily, this thing has made a big old run. It's quite the move higher. But where I really like Uber is on the weekly. Also, the fact that it's just been added to the S&P 500, I don't think that's a bad thing. Provides a little more buying pressure for the stock coming in. But Uber, I think, is a company that has kind of figured itself out now, right? Being added to the S&P 500 means that stock is consistently profitable. And when you look at this thing on a weekly, that's where I really want to step back. If I jump back here to using these little style buttons over on the left that I love, jump back here to the weekly, we see that this thing is just working on getting back above those all-time highs. We have fizzled out a little bit as we've tested them, those highs from 2021, early 2021. But I think that this thing has a lot of room to run. This is an early public company. Uber has not been public for that long.
It feels like it has, though, but it really hasn't.
Right? I mean, a huge company, 120. You can see up here in the full quote, 122 billion basically on the market cap. Big company, but I still think this has a lot of room to run. And someone said, we're kind of stepping back from the charts and the fundamentals here, but someone pointed out to me recently that Uber's mission is basically to become the everything app. When you think that they've got transportation, but they've also got food delivery, they could do other, grocery delivery, they can do other item delivery, they could get into shipping. It starts to kind of become this, they sort of do everything, a little bit of a kind of an Amazon play. So when I think long-term about a name like Uber that's kind of figured itself out here in the first couple of years of being a public company, now it's been added to the S&P 500 right up there near those all-time highs. On the weekly chart, this thing has a lot of room to run, I think.
Yeah.
So that's where I'm kind of watching this. A little bit less on the daily and a little more on the weekly. Realistically, I could say this is one to watch for 2024, not just January, but really for 2024 and beyond. I think that Uber's got a bright future ahead of it. So
it's so interesting. It's a really good point thinking about. I mean, I think if you sort of bucket Uber as a ride-sharing app, you think what's the upside for that, like an Uber or Lyft, if that's what they're doing, but. Uber Eats is something that I don't know what the percentage in terms of how people use it, but a lot of people are using Uber Eats to get deliveries of food and a lot of other things. Yeah. That's when you could see this kind of taking that next.
And I say that it's got a little bit of similarity with NVIDIA too because of the kind of utility. It's not quite as much of a utility that we all have to be using, we all have to be paying for.
Yeah.
But if I even want to go anywhere in the city these days, or I'm go to New York or whatever it is. Yeah. I'm catching an Uber kind of no matter what, and I'm a little bit stuck on that at this point. I kind of don't have other options in a lot of places, right? Yeah. Uber almost is your transportation utility as you're traveling around. Yeah. I've got a neighbor actually who's given up their car, and he said, we just use Uber. I use Uber to commute to work, and I don't need a car now. The cost savings of not having the car and insurance and everything offsets the cost of Uber. Yeah. I mean, that's real for a lot of people. So. Could become a utility.
It's so, and what I think the challenge with a company like Uber is the regulatory issue. Sure. There's a risk there that something happens, but at the end of the day, what I love about the charts is they're all of that's kind of priced in, right? Yeah. This is what investors are expecting.
Exactly.
And I think if there is some big issue with a regulatory problem, the chart's going to reflect that pretty quickly.
Exactly. So I'm watching those all-time highs. I think if we can get above those all-time highs, actually hold those, break out on the weekly chart, this thing has a lot of room to run ahead. So.
Good chart. I like that pick.
Yeah.
All right. My final chart. We're kind of sticking with I think the subtitle for this episode is going to be technology as a utility or tech utility plays kind of, because my last one is Spotify. And I was sharing with you before we got started, we're using an app, my family and I, we're spread all around North America. I realized as we set up this music app, we all had Spotify accounts. We were all sharing links, and it was sort of a language that my daughter in her teens, my parents, a little older than that,
Yeah.
and everyone in between, all able to communicate through Spotify. And I think
Right.
that was a wake-up call for me. Regardless of what's going to happen, if you have a Spotify, chances are this is not something you're going to just cancel randomly. It's sort of become part of a lot of people's lives. Podcasts and other things are certainly more and more a part of it.
It's a big old flywheel.
It is. And what's interesting is the chart, I think, is reflecting that long-term potential as well. Similar to like an Uber. I mean, think of these apps and products and services that you see yourself using consistently, where it's just kind of baked into your normal routine now.
Yeah.
What I like about the chart of Spotify, we peaked in July and had this really sudden downdraft. And I think that gap lower, when we gapped below the 50-day, I remember this being a bit of a concern because you think, okay, new high, that's failed, and now we're coming down. But what's happened is we've now found a little more stability. After that, we recovered the 50-day and broke above it. We held that on a couple pullbacks. And now from there, we've pushed higher. The momentum was getting a little scary there in July, August, because all of a sudden it went more in the bearish phase. We're starting to underperform, but all of that has been fixed now, right? So the RSI now more in a bullish range. Recently, we pulled back. The RSI bottomed out around 50 back here in October, around 40, and this is more kind of classic behavior in a bullish phase. Now all of a sudden we're setting into kind of that low volatility uptrend of higher highs and higher lows. I think that July resistance was a key one. If you look, we gapped higher at the beginning of December. We've now, appear to be holding that July high on the most recent pullback. And I mean, the short-term idea is, I think that's a really interesting place to, sort of think of a stop. The 50-day moving average, that July peak becoming support. It's sort of the lower end of this gap here. I think that's all something to pay attention to. And for now, it appears like it's holding. And if so, this appears to be just a nice, slow and steady trend that has recovered from that sort of sudden downdraft last summer. The relative strength, if you look at the last 12 months, just a nice, consistent outperformer. When it's pulled
really
back, when it's overall been in a positive trend, the relative strength has stood the test of time here, at least in the last year. So I like that because, again, and when you think about defensive positioning and what that really means, names like Spotify, this isn't an emerging technology as much as it feels more like an emerged technology. There are a lot of risks to this. We talked about, podcast model, what that means. I mean, there's a lot of competition in streaming content. But overall, I think the chart is reflecting good upside opportunity. So I think that with the current setup is pretty compelling here.
Can you step this thing back to the weekly?
Oh, yeah.
Because that's where I think Spotify gets really interesting, too. I mean, you jump back, it's kind of an Uber conversation, right? You've got this thing that's gone sideways, and it's starting to make a breakout. You've got plenty of highs above it. So it's got a lot of overhead supply that it's got to get through. But there's a nice weekly chart breakout setting up here, really kind of consolidating since the IPO. And it's crazy to me how much this chart has tracked the chart of Netflix in the last 2 years, too. And if you pull up Netflix and Spotify and you take the labels off, you're almost going to be confused which one is which. Netflix is maybe a little bit further ahead, but they've followed a very, very similar pattern of really, really tough 2022, and they've finally moved forward, back to claim those highs. This is a great pick. I love what you're talking about with the utility stuff, and really is modern utilities. Yeah,
these are the kind of area, and again, the backdrop to all of these ideas, I think there's seasonal weakness that concerns me. So where do you go when you want to own stocks in a period of instability? I think leaning into names that you think are more of that defensive play, and tech could be a nice sort of a sweet spot for investors.
So makes sense.
Your final pick?
That's a good pick. My final one, we're stepping back from stocks. I'm hitting uranium.
Right, okay.
What do you think about that? This is another one that I got to do kind of a multi-time frame look at. I think this makes sense on the short term, but also makes sense in the longer term. So context here, in the short term, we've seen a big run higher, outperforming the market on that run. You can see the fund absolutely flying to the upside, kind of middle to into the fall of 2023. Really consolidating, though, since kind of the end of September. Here's that big candle at the very, very end of September. And you can see, I mean, we've basically gone sideways, right? But what I like is that we've gone sideways by putting in those higher lows. And so this is really quite a nice little ascending triangle if you want to actually use the 50-day moving average to draw the bottom of it. Trying to make the breakout, so we do need this thing to kind of prove itself. It's got some highs that it needs to work through here. But I do think there's a nice ascending triangle breakout here on the daily chart. Volume has really picked up on this thing, which has been wild. So As it's kind of trying to test it here, we've seen volume actually pull back quite a bit. But where I really find this interesting is on the weekly view. So if I step back to that long-term weekly view, again, you've got a fund that has absolutely run higher since 2019, since it came online, breaking out on the weekly. I love to see that. It's a great move higher. I think materials like uranium are going to continue to become more and more important for the global economy, global markets, and everything in the years ahead. We were also talking about things like water. Some of these different spaces are pretty interesting right now. But seeing this breakout on the weekly, that's where I really like URNM here, uranium. If this thing can hold and break out of that kind of shorter term, daily chart, I think there's a lot ahead for uranium here.
It's so interesting as we're talking about. I mean, we have 9 stock picks, and then we can. It's a beautiful sort of testament to investing in 2024 that you can pop a direct play in uranium as sort of like the last pick. With ETFs. When you're thinking of stocks versus ETFs, because you have often brought up ETFs in this, what is that just a chart decision? Like, all right, the chart looks good, we want to do it, or is there a thought process where you're like, is this an ETF thing? Is this an individual stock thing? Like,
that is a really good question. I find that I'm willing to take a trade on an ETF. I try, though, to kind of bucket them into different kind of categories in my portfolio and the way I structure things. So, typically for me, ETFs are going to be a longer term play. And I'm a little more willing to trade individual stocks.
Got it.
But it depends. I mean, sometimes there are names that'll come across the screen, and the chart of semiconductors or something is set up perfectly, and so I'll put on a trade on that. Uranium actually is a good example right now. There's probably a shorter term kind of daily chart trade on that, but could be a nice opportunity on the weekly for a longer term move. The way that we've got it set up in StockCharts, being able to scan for these things, I keep lists of individual stocks. I like to group things by the S&P indexes, so I'm typically scanning for S&P 500 and 400 and 600 stocks. But I've also got a universe of ETFs that I'm scanning for, and so I'm reviewing those lists and seeing what's working, what's making new 52-week highs, new 9-month highs, new 6-month highs in the ETF space. It's not, I don't approach it exactly the same way as individual stocks, but it's definitely part of the system, and there are plenty of funds out there that provide really, really great opportunities.
I have a similar kind of perspective on it, and I think for me, like, I have 2 sets of scans for most things. So I look for new highs, new swing highs on individual stocks, new swing lows, and then ETFs is a separate bucket, and that's just something I've done for so long. I found for individual ETFs a lot of times it has to do with, do I feel like I have a sense of an individual stock, and that would be a compelling opportunity, right? I mean, is this a semiconductors are doing well, or Intel is a particular idea within semiconductors? So, sort of taking that final step for some people might be helpful as well, but
it depends on the space too, right? Because I think of things like biotech. That's probably the peak example for me. I have a lot of trouble playing individual biotech names. There are just too many sort of existential risks to those companies that I don't really want to worry about.
Broader ETF kind of cushion.
But biotech, exactly. Biotech as a space, if that's starting to set up well, and I'm seeing a lot of individual names setting up well, I might be a little more excited to play biotech as a space through an ETF than trying to go after the individual names. When it comes to something like, I mentioned semiconductors, but when it comes to something like semiconductors, I'm a little more willing to play something like NVIDIA or Micron instead of having to go after the ETF, the whole space. But it varies by sector, by industry group, that kind of thing.
Good point.
So,
10 good charts.
10 good charts.
I appreciate it, Grayson. We'll keep doing this, I think.
Yeah, this is fun.
Okay.
This is fun.
All right, everyone, thanks so much for joining us. It's been a pleasure to share with you these top 10 charts for January 2024. Grayson and I have had such a fun time from last year into this new year, going through the charts together, playing off of each other, thinking of some of the lessons we'd love to share with you using the StockCharts platform. If you have questions on any of the charts or the indicators that we use, make sure you drop a comment and let us know. Or is there a symbol, is there a ticker, an ETF, a stock that we missed that you would have included as one of your top 10 charts? Drop a comment and let us know and why. For Grayson Roze, I'm Dave Keller here at StockCharts.com. Be well, stay safe. We'll talk to you again soon.